Hey everyone, we're back, Midas Letter Live. I'm your host, Ed Milewski, joined with my friend, Steve Misener. And Steve's been here all week, and it's been a hell of a week. It's been a historic week in a lot of ways. We've had the marijuana stocks get hammered, and now the U.S. market seems to be becoming a bit unglued.
Yeah, very volatile week, and we get an up day and then a down day and then an up day, but there's been more steps down. Obviously, market's trying to adjust, and we're in the midst of the big earnings season now. Some big blowout numbers, Microsoft and Boeing hit some great numbers, and then some weaker numbers out of other sectors.
Amazon notably.
Yes. And it isn't even so much the numbers themselves for the quarter. It's the guidance. It's the commentary that companies are prepared to make, and if they make no guidance, then people will construe that as negative. And the guidance saying we've got some of the conditions of late economic cycle, rising labor costs,
Yes.
and from full employment, and also. And possibly weaker sales growth going forward.
Sure, and you know, and again, the bond market, you know, the higher prospect of higher rates. I mean, we saw it in Canada. I'm sure the bond market's probably rallied a bit into this equity.
Yeah, that's a bit of the I wouldn't say confusion, but the bit of the back and forth in the bond market is if the guidance from some of the big reporting companies so far, and if that continues, then the investment community will say, well, we don't need and we don't require maybe as many aggressive Fed rate hikes, interest rate hikes that had been indicated even a couple of weeks ago,
Right.
With some of the latest commentary from out of the central bank. And if that means we're not going to get as many Fed hikes, then maybe bonds aren't a bad buy here. So bonds were defensive, they generally are, but then people were scaling out of bonds because of the very hawkish, aggressive talk out of the Fed about rate hikes this year, well, mostly next year and beyond. And then if the economic numbers coming out of the reporting companies and the CEOs are guiding and tempering their forecast for next year, then you could say, well, maybe the hawkish comments aren't as required, and maybe the longer end and the midterm end of the bond curve is actually maybe a buy, given that it's been knocked off in the last few weeks.
Yeah, it's a fine line there, isn't there? I mean, if the companies can't make any money, how can they raise rates, right? Like you know. So I've always
well, it's not about them not making any money. It's about whether the tremendous earnings, really the explosion on the upside continues, and equities, the stock market is a forward pricing mechanism. I mean, we're not really buying for what they're doing today.
Yes.
Market, I think, tends to look forward 12 to 18 months and trying to forecast, and so in that sense, stock market is usually a fairly good leading indicator, although some more cynical pundits have said over the years that that Wall Street has predicted 6 of the last 2 recessions. So sometimes there's too much bearishness.
You know, and it's been on a rip too. I mean, if you go back to when the world blinked in 2008, so here we are 10 years later, and you look at a chart, it's hard to even see the blip, like it almost looks like a non-event.
Well, I think blip or a blink is an understatement. There were dark times.
No,
they
were.
Big double bottom.
But now it was a buying time of a lifetime.
Sure.
And that's the part that you think, oh my God, the world's falling apart.
Yeah, liquidity was precious.
Well, Bear Stearns was, Friday they said no problem. Monday the thing's zero.
Yes.
Yeah. And then the other ones rallied. Anyway.
But there was, in fairness, it's, as we talked about previously, it's difficult to buy when there's so much bearishness. But that's therein lies the buying opportunity. Yeah.
I'm going to just put up the Midas Letter indices here just before we're going to throw to something else here shortly. Mm-hmm. But I want to just see what the indices, the Midas Letter indices, are doing. Cannabis.com, and we'll have that up here. And here we go. Okay, here's the several indices. Well, the big one's down 3.3%. You know what? Let me just, if I can just, there we go. That's better.
Right.
No, that's not what I want to put up. Yeah, so the big index with all the heavier weighted companies by market capitalization down 3%. The small ones are not much change there. So, but the CSE, which is where the big action's been, a lot of those companies have had big moves down. Well, that's a small move too. I was looking at the 10 points, thinking that was percentages. But so the smaller indices today, not so much, but the big ones. I'm going to just click on.
Well, we've talked about why that is sometimes, and yet the large caps and the more liquid ones have provided great leadership. On the other hand, when people want liquidity, they want out of the market, or they want to take some profits because that's been the hardest running sector, then sometimes they go to where the liquidity is to get cash out. I mean, it really is dependent on the on the daily daily activities, but seems there's money coming out of the larger caps today as opposed to small caps.
Yeah.
That's what the indices would indicate.
And I note Aurora, and I don't follow it that closely, but I noted the other day when we had the real drop, it got down to around right around here, $9.12 or 18 cents or something like that. A nickel here, a dime there, probably doesn't matter. And then we're back there now. So you know, a move below 9 on Aurora, I think, would be troublesome.
Yeah, and HEXO, they reported their Q4 today.
Okay.
And I think you know, these are not generally earnings-based. They're not earnings-based reporting focused companies yet, because they're still in the ramping up stage of their activities and their sales.
Sure.
But I think there are a couple of noteworthy highlights out of the HEXO story. And from a financial highlight, they've increased their revenue per gram to $9.26 from $9
Yeah, I see
in the
that,
prior
yep.
quarter. Sorry, from $9.24 and $9 from a year ago. So some modest increases. That's about a 3% increase they're getting on their on year over year on their product. I think that's noteworthy. They're showing a 14% increase quarter over quarter to $1.4 million.
Yeah.
And they've shown a volume increase of 13%. So these are the kinds of, I think, I wouldn't necessarily say they're typical, but these are the kinds of numbers the markets are going to be looking for, that now that these companies are changing from build out startups, that now we're getting numbers, and now we're going to be able to do quarter to quarter, year over year. And even though we're starting from very, very small base, seeing these kinds of increases will be positive, and I think investors will continue to start focusing more on not just what the conceptual build out and the market opportunity is, but we'll start looking at the income statement. So I think that's noteworthy, and there's still, many of these companies, remember, are debt free. They've raised a lot of cash. This one's sitting at $240 million.
That's $250 million.
Absolutely. So these things are very impressive. And the last comment we'd say is that there are the strategic alliances continue. You know, the dance as well as the partnerships.
Yeah.
In this case, they've formed a joint venture with Molson Coors Canada to pursue opportunities in non-alcoholic but cannabis-infused beverages. So I think that's very interesting. And they've also are dealing with Metro Supply Chain Group to assist with their distribution in Quebec. So I think these are noteworthy highlights, and I think that this is going to be more and more typical of results that we see in the space, where We're going to see incremental volume increases quarter to quarter, especially year over year. We're going to see incremental revenue increases to go with that. And the fact that they're getting some small pricing improvement on a per gram basis, I think is significant.
Yeah.
And the strategic deals will continue unabated.
When I look at these bullet points here on the financial highlights, if I'm an investor and you and I have been looking at things for a long time, the fact that they're debt free and they have $250 million in cash is very reassuring.
It gives them a lot of flexibility, and that's again right through the sector. There's a lot of companies cashed up, and they'll be looking for opportunities forward.
Yeah. So I wonder, can we get the HEXO chart up here? There we go. I just wanted to point this out because this thing has been is one of the big ones. I mean, the market cap of this is approximately 1.13 billion. Mm-hmm. And so they got $250 million cash. They've got, quarterly revenue they just reported of about $1.4 million.
I think, I mean, the revenue numbers aren't material to the market cap of the company, but I think it's important to know that we're now beginning that key construction of an income statement, and investors will continue to start looking for growth. And many of these companies are going to show really dramatic growth as their first cultivations and their crops and their distribution start to hit the markets. I think it's also, you're a technician, Ed, I think that's a very interesting chart because there's a long period right from January of this year right through to September of support in that $4 to $5 range, and the stock's at $5.75. So I think you're going to start to see this one start to show some support. It did bounce this week already.
Yeah.
And again, this may be a theme or a familiar chart across the board in the space. We're talking about HEXO today because of their reported results, but I think that this, I think some of these longer-term positive attributes, I think, are going to be typical of the space.
We're going to go to an interview we had earlier with Martin Cronin, who is the CEO of Patriot One Technologies, and I know they've got some interesting technology that, there's persistent rumors that they're going to be the sort of leader in this area.
Yeah, in weapons detection for public spaces like hotels.
Hotels, yeah.
And it's a really exciting field they're in, and they seem to be blazing a new trail, and I think it will have high levels of.
Yeah, well, let's hear from Martin Cronin.
What we want to do is greatly improve public safety by detecting threats before an attack happens. Our belief is that you should be able to do that with as little inconvenience to the public as possible. If you can deploy sensors covertly where they're unobtrusive and unseen, the public are happier, but they're also safer because you identify a threat before an attack happens. That's at the heart of our philosophy of threat detection. What we've set up here is a number of stations to show how we implement threat detection technologies in live environments. The cognitive microwave radar, I think, is probably fairly well understood by your viewers. We're looking at the introduction of video analytics so that we can detect and tag weapons in open view using the camera systems in car parks, for example. Somebody pulls a weapon out of a trunk of a vehicle, puts it in a bag. Even before they come anywhere close to the premises, we've already detected and tagged that weapon. We're looking at targeted magnetic resonance sensing for detection of mass casualty weapons, IEDs, and then we're also looking at some specialist additional sensors for the detection of explosives in liquids and electronics. In addition, we have to have the software package which ties it all together. How do we represent all of that data in a really user-friendly interface which can then connect directly to emergency services and graphically represent details of where an incident is happening? We have something like 10,000 qualified sales leads now globally, with 12 distributors appointed. We're moving into revenue this quarter. Initially what we call paid pilot installation. That'll just allow us for those first few clients to just iron out any unforeseen issues, just do our tweaks, ready for much broader commercial rollout over the course of 2019. As a public safety company, we can't afford to have failures, and so we're doing everything we can now to make sure that we're completely ready for that handover to clients by the end of this year. Certainly the market appetite we're seeing for our solutions gets us really excited. We think we're going to see tremendous growth in 2019.
Welcome back. Very interesting company, Patriot. And I heard today that they found that the guy who was sending out the bombs,
Oh,
they picked him up somewhere in Florida. I guess he's a single suspect.
okay.
He's arrested, and I just picked it up off the highlights. But it's
Yeah, I haven't caught that news.
Yeah.
About that. Obviously, the manhunt's been ongoing and
they're
wildly aggressive. So it
Yeah.
sounds like they came up with a name.
yeah.
I think how that plays out in the U.S. Election in 2 weeks' time or a week and a half will be interesting. The Republicans look like they might pick up a few seats on the Senate side, which will give them full control of the Senate. Maybe 54, 55 seats I've been hearing and reading about from 50.
There's 100. Is there 100 seats?
100 even, yeah. Two seats per state. But the House race is trickier because there are a number of swing states and swing ridings, swing constituencies where the Democrats may take and typically midterms usually go in favor of the party that's out of power, especially out of the executive office, presidential power. And if we get a control by the Democrats in the lower house, I think it's going to be probably negative for the markets a little bit. I mean, I think that may be getting priced in right now as part of the other malaise of the market this week. But it'll lead to a bit more paralysis in Washington because the House, the first thing they're going to do is they'll probably try to impeach Trump for reasons unknown, but it doesn't matter. That'll be the sport that they undertake. It won't get through the Senate, but it'll be a big distraction.
Right.
And it'll also be trickier to get spending bills through, and it could lead to, again, another government shutdown over a fight over spending, especially maybe funding the wall. That's one of Trump's key platforms. So I think that's part of what's causing some trouble in the markets, in addition to the potential that people think this might be peak earnings right now.
Right.
And the guidance, as we talked about, is problematic. What's also interesting, Ed, at this point in the cycle is when we have a 10-year economic expansion after the 08 situation, so maybe six really strong years,
right.
And we have this tightness in employment, typically in a late cycle economic picture like this, you would get some spikes and some rising pressures on natural resource prices and also on the energy complex, on oil and natural gas. And we're not seeing that at all.
Oil's down $10 a barrel from 2-3 weeks ago.
Yeah, and I think that's noteworthy on a couple of points. I think it also reflects some weakness coming out of China that people are concerned about, because China's such a key driver of global economic activity now. They're also a huge consumer of natural resources.
Sure.
But in addition, it shows how the Western world economy has become this new economy. It shows the preponderance of technology and pure, maybe white-collar, labor-based companies and technology companies that are considered the new economy versus the bricks and mortar and maybe Rust Belt type manufacturing companies. That the bigger the component of the non-manufacturing sector is of course a micro consumer of natural resources versus what would take place in any kind of manufacturing. So that's suggesting that there's lesser demand in an economic cycle for natural resources, and the intensity of copper and the intensity of steel in each unit of output of GDP is becoming less and less relevant and becoming much, much smaller. So we're not getting those pressures on natural resources.
And you know, and I mean, they're talking, like I've heard several automakers say, for instance, that you know, they're going electric. Like it's going to be more and more electric, and electric uses more copper, and yet you watch the copper markets, you don't see it. Like there's something that doesn't make sense, at least from my you know, my.
Now, the electric car is expanding sharply, but it's still kind of in the forecast yet. So we haven't seen the numbers get really explosive yet in terms of actual output. It's all looking forward. And I guess also from a copper consumption basis that people will be waiting until they need it, the just-in-time concept.
Yeah, and you know, they're talking about, like, we saw tremendous economic activity in China over the last 20 years. But India hasn't really fallen to the same, and there's 1.2 billion there, or another 1 billion people, or 1.2 billion, 1.3 billion. I mean, if that were to start to happen, I guess it would be very positive for.
I mean, I'm no expert on India or Southeast Asia, but I think there is quite an economic boom going on there. But in the aggregate, it's just not affecting natural resource prices the way it typically would at this point in the cycle. I think it was noteworthy. We'd been talking about it off camera about Budweiser reporting as well.
Yeah, I wanted to bring that back up to you because I've heard, you know, I've been sort of looking into that a bit, and you know, there's been some of these beer companies are saying that the forecast, the guidance isn't that rosy.
Mm-hmm. Well, I mean, the big beverage companies, they have already done all the mergers, not just in the United States and in Canada, but globally, where you ended up just with a few powerhouses. And that is very typical of an industry when it's gone from rapid growth to a very mature profile. You always get mergers take place, and it reduces competition, and it's a way of cutting costs through attrition and through rationalization of the industry. We saw it in the auto industry.
Yes.
We see it in the airline industry, we see it in the beer industry, the liquor. I mean, that's just, and tobacco. This is just typical of a later cycle a business that is mature, is you get the consolidations. Well, we've had pretty much the full consolidation there. Budweiser's numbers were weak. I think you pointed out they cut the dividend.
They cut the dividend in half. Yeah.
But I think that
a mature industry for the big ones.
Yeah, and I don't think that we can point yet to the impact that cannabis substitution as a beverage, as a recreational beverage, may come into play yet against beer. I mean, I'm sure that it's underway in individual states that have been recreationally legal for a while, like California, Colorado, Washington, things like that. But on a broad basis in the United States, recreational hasn't kicked in yet. And I think it may be more just related to other factors in general. Alcohol and beer consumption. Beer, we know, is not a low-cal beverage. There are greater sensitivities around impaired driving, as there should be. And so you've got diet issues, you've got lifestyle issues, you've got legal issues.
Yes.
And then also the explosion of craft beer and people tastes going
I was going to bring that point up.
I mean, yeah.
You go to a bar today, and you often see, if it's like there's a lot of draft handles on the counter. Sometimes there's 20 of them, and I don't know. They can't all be owned by big companies. And there's a lot of microbreweries out there that are eating into the lunch of, the Budweisers and the Coors, et cetera.
Yeah, and various local, state, and provincial governments have been encouraging the development and expansion of these craft and microbrewers, and the microbrewing business is has exploded in the Canadian context, and I'm pretty sure it's been similar in the U.S. So it doesn't, in some sense, it may not mean that there's a massive decline in beer consumption, It's actually maybe just a substitution issue that people may be drinking less beer, but they're drinking more specialized beer, and they're getting their palate covered in more specialized rather than mainstream beer. Interesting stat for you, Ed. Do you know what year in Canada was the highest per capita per person consumption of hard liquor?
What year?
1971. It's right out of Mad Men. I mean, have a hard liquor drink at lunch, have one after work, get home and have one. 1971. Not the aggregate consumption, obviously, because of changes in population, but per person having a hard liquor drink.
Know, in about 74 or 75, I guess, I was working for an accounting firm in London, Ontario, and we used to go to this place for lunch, and there was a number of people there. I used to watch this, and they were drinking martinis like there's no tomorrow.
At lunch.
At lunch.
As portrayed in the TV show
Steve,
Mad Men. They'd have a drink at 9 in the morning in the office.
And I remember going
time.
for a beef sandwich to this one spot, and $3.95 probably, and then draft beer was $2 a glass. It's a different time.
It was.
But you thought nothing of having 3 or 4 beers at lunch and going back, and trying to do a trial balance. Anyway.
Different time.
Yeah. So we have.
But I guess to close this segment out, or this tangent, I think that while Budweiser's problems and InBev's problems are out there, I think I wouldn't say it's cannabis related yet, but a company like Constellation that's really been looking at future trends and potential, and having made 2 key strategic investments in Canopy Growth, really providing a global focus on the Canadian cannabis industry unbelievably, with the leadership of Canopy. I think that, and we talked about Coors Canada doing the deal with HEXO. That's a smaller one, but I think that it highlights the fact that these big mature companies are looking, and I think we're going to get maybe more of these positive catalysts, big news items. We've heard the rumors about Coca-Cola, unsubstantiated at this point. We've heard the rumors about Altria, Philip Morris.
I get those mixed up all the time.
We've heard the rumors about that. There are obviously other players, and so I think that's significant that it's on the radar screens. These big companies, especially in the mature businesses like tobacco and beverage, they're going to want to get in the space.
I have to agree with you. I have to agree with you 100%. It just makes a lot of sense.
So those can be game changers in terms of the sentiment on the cannabis stocks. We've seen how big news items like that can kind of turn on a dime, and they can bring focus and confidence and buying power instantly back to the segment. Whereas in the lack of news and against a backdrop of generally negative bias in the broader equity markets, these stocks are drifting at the moment.
Yeah. Now we're gonna switch gears here again, and we have pot legal here in Canada. What about outside of Canada? Our reporter Liz West looked at cannabis regulation around the world. We're going to hear that right now.
Believe it or not, Canada is only the 2nd country to formally legalize recreational cannabis, next to Uruguay, which did it in 2013, but it will not be the last. Many countries around the world are also reconsidering their views on pot. So let's have a look at cannabis regulation around the globe. Here are the countries and U.S. states where cannabis possession is decriminalized for small amounts ranging from 1 gram to 25 grams. These are the countries that have already legalized it for health reasons. In New Zealand, government is in hot debate over medical marijuana, when to legalize it, and there's even talk of holding a national referendum in 2020. This is where you can buy it and smoke it for fun. Malta, South Africa, and Mexico are having very public debates over following in Canada's footsteps, with Mexico saying it may legalize marijuana in a bid to reduce their abundance of drug-related crime. Cannabis Compliance Inc. are the homegrown experts that other governments are turning to for guidance.
So we're working with a number of federal governments and companies that are coming to us from around the world to help them shape policy. As soon as they start to look at anything relevant to cannabis legalization, either medical or non-medical, Canada is the first one that pops to mind. And as soon as somebody looks at Canada, people sort of look at who are some of the consulting companies in Canada that are looking at all of this that can help people. And so we come first and foremost to mind. The eyes of the world are on Canada and are looking at us very closely in terms of understanding how we went about this process and sort of where we are, and we can certainly expect a number of international countries to start looking at us and emulating what we've done here.
So let's not screw it up. Around the world for Midas Letter Live, I'm Liz West.
Welcome back. Very interesting. It's going to be interesting to see how other countries in the world go now that they've seen Canada, a very, very, is it a G7 country? Is that what they call it?
Sure.
So G7, legal, and people, you might start to see it snowball. I mean, they're talking about legalization of medical pot in England now, for instance.
There's so many factors at play to sort of make a case to remove the old, historic, probably unwarranted bias by categorizing cannabis into a harder drug segment, as the U.S. has done.
Yeah.
There are still those who believe it leads to, it's a gateway drug. I really don't see that myself, but I'm not in a position of legislation. But we've also talked about how the revenue side and the job side, in addition to the medicinal advocates and what seems to be more and more studies that prove that CBDs have very, very strong positive attributes medicinally for people and health-wise, and the argument that that cannabis recreationally is just not that problematic if it is regulated and if it has the same kind of societal controls as alcohol does and other recreational activities that require a safety component to it, that other countries will be under pressure, both from the advocate side and then from a revenue side, a job side, and say, well, why should the country next to us, and in the U.S., why should the state next door? We talked about Utah versus Colorado, and Utah is a very conservative state, and there's Colorado, and they're making all this money and the jobs, and so there'll be political pressure both to capture those jobs and to capture that revenue, in addition to advocacy pressures from the grassroots.
Yeah, well, they certainly. The floodgates have been opened, so to speak, in the world, right? Like, people are looking at all the documentation regarding the health benefits, or if you can't eat properly and you got a bad appetite, you smoke a little marijuana and you have no problem eating.
I mean, the Canadian federal government has peppered some of the airwaves on the TV networks with this new ad that says, kind of a synthesized Q&A, and the person says, why did Canada legalize recreational cannabis? And the spokesman portrayed in the commercial said, well, to take it out of the illegal market, to provide safety and controls, and to put greater controls in to ensure that that this product is not in the hands of youth. It's a 3-point bullet point discussion, and it's on the endless cycles now. And I think that they didn't talk about the revenues, they didn't talk about the jobs, but they're not going to position it that way. But this idea of taking it out of the illegal sector can even be equated back to the failure of prohibition from 1920 to 1933. For 13 years, people wanted to have drinks. People basically did have alcohol almost at will and in freedom.
Yeah.
And all it did was lead to an incredible expansion of the underground networks, and the government's making a case that
Sure.
they want to bring it mainstream.
Yeah, it's pretty fascinating when you know, I mean, obviously I wasn't around in Prohibition, but you know, booze was illegal. I mean, and you know, people were making it. There was a lot of illicit activity. You know, you watch these shows like Boardwalk Empire, and anyway, it's interesting. It's interesting, but usually governments acquiesce and they give the people what they want. I mean, it takes time sometimes, but they do. You know, at least that. You know.
I say that as being an optimist.
Well, you know, I'm thinking of gambling, for instance, and you know. Anyway, okay. Earlier, our Ben Smith interviewed John Archibald, CEO of CO2 GRO, and let's hear what they had to say.
Welcome to Midas Letter Live. We have a very special guest in studio today. I'm with the CEO, John Archibald of CO2 GRO Inc. They trade under the symbol GROW on the TSX Venture. John, welcome.
Thank you. Good morning.
Now, I would like to lead off with a very material piece of news for your company, which was published on October 24th. Essentially, it was good clinical data from your patented foliar spray technology, and that also we had some good data that you published September as well, and it's a good follow-up to that. Can you explain more about how important that data is for your company's integration?
Well, certainly the results in the flower world, it's a $200 billion a year business. Actually, sort of per square foot, a little more valuable even than food. And what we've proven with the flowers on several trials in Michigan is very distinct advantages of growing faster and growing bigger with better root development and more intense color within the flowers, all bringing value to the grower. Secondly, we've actually had full-scale trials there where people are growing 40 and 50,000 flowers per time with the technology as well.
Okay, so does this data that just came out, is there a critical mass scenario going on with your company along with what was published in September? Are you starting to see more awareness in the marketplace about just how prominent the value proposition is with some of these growers?
Yes, we are. As a matter of fact, it's sort of gone from us contacting people to people contacting us. They're seeing the results. The results are being spoken about, and we are now having individual growers contacting us. We're also starting to have some ag industrial partners and large companies approaching us about the technology and wanting to work with us. So definitely critical mass.
Okay, is your technology fully scalable to say a 250,000 square foot greenhouse, or is it something more that's something more for small scale growers at the present time?
It can be put into any size of greenhouse. Basically, what we do is largely integrate with their existing irrigation systems and put the systems in. So whether you've got 2 acres under glass or 20 acres under glass, the integration is very simple and totally scalable.
Excellent. Now, you've recently announced the exercision of over 6 million warrants, and that raised about $1.25 million for your company. How do you plan on using the funds and advancing your business strategy going forward?
Well, the funds are for our growth. We expect to be EBITDA positive in 2019, and we're recruiting more people to help us get there. It's an interesting thing. These warrants were exercised largely where the share price was at or below the warrant strike price, but the warrant holders believe in the future of the company and believe strongly in the management and our plans for the future. And so it underscores that underscored it very succinctly, I think.
A lot of confidence in the company, because I believe a large percentage of the warrant holders exercised even though the price was at or just below strike. Is that correct?
That's correct. That's so obviously you have to believe in the management team and their vision and their plans, because you're not taking a profit. You're just investing in something you believe in at that point.
Of course. Now, looking at the chart, I know your company has been within a range of just over 30 cents on the upside and about 15 cents on the downside. So there's a developing 1 year range that's very definable on a chart. Now, what catalysts are upcoming for CO2 growth to help perhaps propel that consolidation into more upward momentum? Is there any imminent catalysts that you see in the future besides going EBITDA positive next year?
Well, certainly. We're going to be starting cannabis trials in the U.S. We have several more trials for flowers. We expect our first real contract yet in Q4. So yes, some very, very positive things happening for us, along with more positive results out of our work at St. Cloud State University, where they've been doing all the plant physiology work for us, and we see continuing good results, and we'll be publishing further results in later this month as we finish up trials.
So it seems to me that this might be part of your growth strategy going forward. Getting your product out there in all these clinical trials and creating sort of a critical mass of data that just can't be denied by the market anymore. Is that so? I would assume that there's more studies going forward.
There are more studies. And there will always be some studies going forward. I mean, anybody that's adopting the technology in a big way, they want to try it out for themselves in a small way, and they can do. When you think about it, many of the crops grow fairly quickly, and so you can see the evidence very early on, and especially with the plant physiology work we've done, we can show a grower what's happening with his plants on a daily basis, so that with some of the equipment we have, he can spot what's happening and know what's happening with confidence while he's doing these trials.
Okay, that's very interesting. So you actually have a dashboard or technology that allows growers to see how the plant's doing on a day-to-day basis. How do you quantify that in the data? How does that work?
Well, if you take a look at things like, you can look at CO2 transfer, you can look at chlorophyll growth, and you can see all of the plant activity just by with some fairly sophisticated equipment, but readily available equipment that we have. So those are the important markers, and especially when you're accelerating the growth of a plant, say 30 to 35%, you want to be able to see those markers, and we can show those markers.
Excellent. Now, just to be clear, your technology is not just specifically for marijuana, although that's receiving a lot of the headlines lately. That the fantastic studies showing minimum 45% increase in cannabis bud value. You've had some pressers come out elucidating that, but it's more than just cannabis, right? It's the whole $8 trillion food industry worldwide. That's what you're addressing. Right?
Exactly, and moreover, what we do is we can, because of the CO2 foliar spray, we can bring what happens in the greenhouse outdoors to value plants as well. So there's and there's many greenhouses that are open air greenhouses and that aren't good for just CO2 gassing. So the CO2 foliar spray brings that CO2 lift, which is about 30 to 35%. It brings them to those people that couldn't normally use CO2. So it's stunning from that standpoint, and it increases the market drastically for us.
Even outside, there's a way to contain it. Your technology.
That's right.
Okay.
Because it's foliar sprayed. Yes, and there is a way of utilizing it outside.
Okay, and without getting into proprietary events of how your technology works, how exactly does your foliar spray, create that CO2 capture within the plant?
Certainly, and it's like anybody's. The leaf is a semi-permeable membrane, just like your skin. Your skin will take in a nicotine patch. You know, take in nicotine. If you were a smoker and you wanted to stop, you'd use it. Maybe use a nicotine patch. It's a chemical, and it'll go through the skin. CO2 is a chemical, and when it's put into water, it too will go through the leaf, and it goes into the leaf, and it goes into the top of the leaf, the bottom of the leaf, irrespective of the stomata, and the CO2 then goes C for carbon for the roots and shoots, the growth, the enhanced growth, and thankfully it releases the oxygen for us, which we need and the planet needs.
Terrific. Well, that's a fantastic update, John. I appreciate you coming on the program, and we'll be following your story going forward.
We'll look forward to it. Thank you.
Well, we're back, folks. Yeah, that was very interesting. And Steve, you and I were talking about the U.S. and in particular Amazon. And I remember in 2003 or 4, it was under $10, and I was pretty sure it was going to go to zero. And some analysts came out and said it's a buy of a lifetime. And the stock jumped $1.50, and I was short. It was a bit painful, but I was probably short 2,000 or 3,000 shares. I actually thought I was going to zero, and it went to $2,000.
It's an incredible story.
What a story. Jeff Bezos, you know, any detractors would have been silenced. So look, the 3 days in a row, we've seen moves of $100 plus. Today's Friday, so Wednesday, I believe, was up, down 104. Yesterday, I think it was up 117, and I was convinced that was a reversal. I really thought when you see that kind of, you know, turn.
Yeah.
And today, they came out with earnings last night, and it's down $140.
Yeah, well, those are, I don't know about sustained reversals, but that's lockstep, but you're doing 2 steps down and 1 step back.
Right.
You're net losing money on that situation.
No question. I mean, that's really, I would suggest it's caused serious damage to the technicals. Mm-hmm. You know, when you get that kind of.
I mean, the.
Still capped at $800 billion.
Well, they're noting today that,
number 3 now, right?
Down stock's down about 20% since the all-time high on
Yeah.
the 4th of September.
Yeah.
And the noteworthy news that came alongside that all-time high was that it had surpassed Microsoft as the biggest company in the world in the public markets, and also I guess it made the founder the richest guy in the world. So
yeah.
But what's Apple, or I guess
Apple's now $1 trillion.
Yep.
Microsoft is 823, and we're sitting at around just under 820 for Amazon. Mm-hmm. Mind-boggling, staggering amounts of money. I mean, you know, you talk about what I can't even imagine. And I like math as a kid and arithmetic, and I was fascinated by what came after $1 billion, what came after $1 trillion. Staggering. I would have never thought I'd live to see $1 trillion market cap.
I think that I think also that this key leadership is maybe going to reflect a leadership rotation in the market that's probably well underway. But I mean, it's been these in some, they call them masters of the universe, but the Amazon, Apple, Microsoft,
Google,
Facebook, and Alphabet of Google, that they've really been kind of
Yes.
almost no-brainers to play. They're fairly high PE ratio companies.
FANG stocks, I guess they refer to them at times.
Yeah, and
Netflix is in there.
Even if the earnings are compelling, it's not just the forward guidance issues, it's the possibility that we could have a bit of a contraction in the way that the shares are valued, even if the fundamentals are strong. But when they're trading at high multiples, we could have just the slightest revaluation of multiples, partly because the forecasts are for tempered economic growth, partly because rising interest rates, even a little bit, change the discounted cash flow model and shrink the PE ratio. So that may be going on right now in terms of leadership rotation in the market. It's interesting to note that we've been talking for a few weeks when I've been in here about the narrowing breadth of the market. And yesterday
Yeah,
was
you
a
pointed
big
that out a
bounce
couple
day.
weeks ago, and you know what? Whenever I hear this, the breath's getting real narrow. It's just a matter of time before the whole thing rolls.
Well, it means that carrying the weight of the index is on fewer and fewer shoulders to hold
Yep.
the index in.
Yep.
And we talked about that a few days ago when Boeing alone, when it reported the strong numbers and rallied, that it was carrying almost 100 points of the Dow on its own move, and basically masking how bad the Dow was a few days ago. I think it's noteworthy today. We've talked about there's about 3,000 listings on the New York Stock Exchange, and yesterday's rally was a strong rally, but there were about 1,500 stocks, 1,600 that were up against about almost 650 to 700 that were down on the day. That's about a 2.6 to 1 ratio, 2.6 shares up for each share that's down. That shows a narrowing breadth in the fact that usually when you have a big, powerful rally on the New York Stock Exchange,
Right.
usually the ratio is much higher of up to down stocks. Usually it's about 4 to 1. So a 2.6 to 1 is still obviously a positive, and it's showing positive numbers on the indices. But what it's indicating again is that it's the bigger names, when they have the bounce, that they're carrying the weight of the index, but that lesser names and smaller weighted names are continuing to drift. And that's again showing a narrowing of the breadth of the market. Whether this can all turn, I'm still constructive that December is going to be better for the markets, and that there's a lot of negativity right now. There's a lot of sentiment issues, and it's again typical for this time of year, but there are cyclical reasons and late cycle reasons to be concerned. But when this selling dries up to some degree, hopefully we'll be getting some of the recovery numbers in. But
Yeah.
that's 5 weeks away. That could be an eternity when we've got this kind of damage going on.
Yeah, we got down to on the Dow about 24,450 according to this chart, and we're currently about almost 24,700. So we've rallied a couple 250 points off the bottom. I think that chart's going to come up here. Yeah, there it is. Yeah, so we've got a nice like that's the low of the day. We've come up, and I think this is a 3-month chart. But you know, the Dow is. I wish my eyes were better. I can't even read that number, but it's come off about 400 or 500 points. 4,000 or 5,000 points.
No, I
No?
think no.
No,
The all-time high.
What is that number right
The all-time
there?
high was just under 27.
Okay, so 27,000 down to
24.
2,500 points.
But we're down, almost 10%.
And you know, whenever I watch these guys on CNBC, when something corrects 20%, they say it's an official bear market territory. I'm sure you've heard that.
Yes.
And we were looking at Amazon, and Amazon's down about 20%. So not saying it's there yet, but you know, if it starts to roll, maybe another 20%.
Yeah, and of course, companies the size of Amazon, there's no one in the wings to make a hostile bid for them. So there's no surprise on that front.
Yeah, wild.
They have to carry their own. Carry their own future on their fundamentals.
Right.
In fact, it's interesting that when companies are that large, they're busy acquiring things. They have so much cash flow. But think of the size that companies like Microsoft and Apple and Alphabet, Google need to do to move the needle. Think of the size of the acquisitions or the size of a strategic change that they have to do. They can buy companies for 10, 20, $50 billion, and it's not really particularly material instantly to the marketplace. That's mind-boggling in its own right.
Yeah, for sure. Okay, we're going to switch gears again here, and we got a pre-record here with Ben Smith and James West. That took place earlier in the day, and we're going to hear that now.
Welcome back to Midas Letter. We're here with the one and only Mr. James West himself. dialing in from Los Angeles, California. Hi, James.
Hey, how's it going, Ben?
It's going well. It's going well. So I hear you want to talk about the market today.
Well, yeah, I'm watching what's going on. I mean, looking at the cannabis indexes, the Midas Letter cannabis indexes, it's more or less an irresolute sideways trading day. No real volume, no real catalyst, no real interest on the sell side or the buy side. But I'm also looking at gold, and I'm watching the gold price action. It has been able to break 1240 today, which is, I think, the first time it's done that in almost a year. And so you look at the weakening situation in the U.S., like the FANG companies all missing their earnings, and the increasing this revelation that Google has settled all these sexual assault suits, and the problems with the Saudi-American relationship now in the aftermath of Jamal Khashoggi's murder by Saudi Prince Mohammed bin Salman. And this all points to a serious weakening in geopolitical stability that I think, I mean, you look at what's happening in the news, there's the evidence of geopolitical instability, but we've grown kind of immune to that and used to it. Then you look at the price of gold and you think that, well, okay, the gold is reflecting geopolitical instability. And then you look at the performance in the broad tech sector and the FANGs, and it's like, okay, looks to me like there's a bit of a convergence of really negative catalysts here. And so, I think that in many respects, the cannabis space operates in its own little bubble outside of the broader market because of its status as essentially a manic investment bubble. But I think we've seen pretty decisively that it's nowhere near a collapse in the cannabis investment sort of cycle. It's just a revaluation to the downside, which is consistent with each and every time it has a major sector-wide catalyst occur, like the Constellation Canopy transaction. That what ensues is always a new revaluation to the upside, and then when the catalysts dry up, then it's a wholesale revaluation to the downside, because everybody sort of says, okay, well that's it for the upward inertia. I'm going to take my profits and I'm going to go home and sit on the sideline and look for opportunities. I think that's what we're seeing here, and I think that we're going to just see a narrowing, as you pointed out, of the range of volatility in terms of price as volume also sort of recedes incrementally. So we're going into October, November, and October is traditionally very volatile, and then November, December, tax loss selling season comes up, and there'll be potential. Absent a cluster of sector-wide valuations in the cannabis space, I think that, this is just the time to go shopping very carefully, look for opportunities that have been oversold, maybe look at newer opportunities that have yet to, sort of take the stage and might have some big catalysts tucked away. But, we saw that when you see the market stop responding to big catalysts like FSD Pharma, who announced that they'd acquired all the outstanding shares of a NASDAQ listed company for $50 million. I mean, that really, they've got up 1.3 billion shares outstanding, granted, but really that should have catalyzed, a revaluation to the upside for FSD Pharma, in my opinion. Now, that being said, I do have a small position. I'm not interested in my comments in that regard.
Yeah, no, I absolutely agree 100%. I think perhaps that fact was lost on a lot of investors, that a Canadian Securities Exchange company actually came in and bought out a NASDAQ listing company. So, and shares actually responded pretty well to that news. So that appears to be perhaps stock specific in the reevaluation that didn't really crescendo to the rest of the market, but that's definitely a notable occurrence, what happened there when a CSE company comes in and buys out a a wholly listed NASDAQ entity. I also think you hit the nail on the head with convergence between some of the technology stocks and the FANG stocks, and what's going on with the journalist murder in Saudi Arabia, in the Saudi Arabia embassy. It's sort of creating a confluence of factors which is hitting the cannabis market along with the post-legalization selling, which a lot of people expected. So sort of a confluence of factors have all came in and hit the market hard. But looking at the market today, I'm seeing the S&P 500 down about 1.5%, and I'm seeing the NASDAQ down about 2.2%, and yet cannabis stocks in general are holding their own. So, it's an early data point, but is the cannabis stock sector finding a bottom here, a temporary bottom, and has most of the selling occurred? Once we've, because it's not really reacting to the market today, and it's been hit quite hard recently. So, yeah, there's a lot of interesting narratives going on right now, for sure.
Yeah, you bet. So, is there any particular company in the cannabis sector, Ben, that you think has been oversold or is in some way undervalued relative to its peers?
Well, I mean, trying to find an undervalued cannabis stock is a little bit difficult right now, since we haven't really seen the full earnings potential that lies ahead in 2019, 2020. A lot of the companies are there's a lot of forward valuation in those companies right now, and a lot of those excesses have to be worked off. But it's really hard not to like a company like Canopy Growth right now. I mean, yesterday you could have bought in basically at the Constellation Brands price of $48.60 a share, as CGC dipped into the $37 US range. So, for investors who missed the boat and missed that 50% plus run up from those prices on August 15th, when it soared past that Constellation's price, you have a chance to get in right now what they're paying. And there's a lot of smart people out there who think Canopy's share price at that level is worth taking a flyer on. So, there's a lot of, there's some opportunities out there for investors who, want to pick and choose on which companies will be the survivors, and the ones that will are probably going to, reap good rewards going forward, I think.
Yeah, you bet. So I'm curious as to your thoughts on the mining sector. With the price of gold sort of notching gains on a continuous basis, we don't really see that reflected in our gold junior complex. Do you think that there's a possibility that gold is on a bit of a trajectory for higher prices based on, growing weakness economically, growing geopolitical instability? And do you think that, my question is, in my usual long-winded roundabout way I'm asking is, should we be buying junior golds at these prices?
Well, I mean, that's a very interesting question. Gold is a really hard one to figure out because of the extreme boom-bust cycles which have traditionally hit the sector. So, I mean, you could be, there are periods where you can be sitting for years and nothing happens, or you have a lot of false starts happening in the sector, and then you have that crazy overperformance which strikes at 1 or 2 years at a time. Now, it's my personal belief that gold prices will basically start taking off once the next Great Recession happens, if indeed we have a deep recessionary trough. And I'm not quite sure that we're there yet. If you look at what happened after the tech bubble burst in 2001 and what happened with the US housing market crisis in 2008, gold took off like a rocket. And in between those times, up leading into the actual recession, it basically trended downward. So I think gold it's getting close to a really interesting point. I'm just not quite sure that we're there yet until that recession comes and until that monetization that the Fed is going to have to do, and a coordinated central bank monetization that's surely coming to save the economy is imminent. So would I be kicking the tires right here with some risk capital? Probably. And but it's going to be a process, not an event, I don't think.
Interesting. So the cannabis sector generally, now going into next week here, what is your sort of technical insight telling you about what to expect for the week ahead?
Well, if you're a trader or a long-term investor, I think we're in a good position. Partly because we're in a definable position in terms of the sector leader canopy growth. So we have a 35% drop in prices, and now we have a clear higher low and lower high tightening range. So one way or the other, the canopy growth is going to make a move to the upside or downside, and there's going to be an opportunity for investors on both classes to get in and make potentially a 10 to 15% move pretty quickly. So if you're a long-term investor, this might be a very good entry point to add to positions, or if more short focused, to take those quick gains is okay too. But definitely there's a defining range going on. There's higher lows, lower highs within a consolidation pattern. We talked about it yesterday on Midas Letter, if you want to check that out. And today's price action I would view as constructive for a potential upside break heading into next week, which might yield, say, a 10 to 15% gain on a short-term basis. And long-term investors, a good place to stake a position there or to add to positions.
Mm-hmm. Okay, well, that's great, Ben. Thank you for having me on, and I will see you next week.
Awesome, James. Enjoy the rest of your stay in Los Angeles. I'll talk to you soon.
Sounds good. Bye for now.
Bye.
Well, very interesting to hear from James. I'm sure he's having a lot of things to do in California. Now I noticed that Tilray just went by here at up $1.33 for the day. $108 stock. It's a 1% move. Maybe some of the volatility is being wrung out of the system. But I understand from talking to our friend John McMahon, and you alluded to this the other day, that there's a deal coming out called, is it Acreage?
Yeah. James West and I actually interviewed him live. I think his name's Kevin Murphy, the CEO and founder, and we interviewed him back in June on this show, and we knew that they were gearing up. It's an IPO, I guess an RTO actually, but an IPO. I believe it's led by Canaccord, and it's coming out to settle, I think, in early November, so it's only a couple weeks away.
And how much money are they raising?
Well, they started, I understand they started raising $200 million, and now it's been increased to $350 million. Now, wow. I'm not sure the pre-money value ascribed to that, but it is solely available to Canadian buyers. The securities won't be listed or registered in the United States or marketed to the U.S.
Can Americans buy this over here?
I believe they can, but I'm not an expert in the field.
Right. I'm always confused.
It will be interesting though, because it will list here as an IPO, but they're active in, I think, 12 or 14 states already, including many in the East. We're aware of California, Colorado, Washington, Nevada in the West as being kind of trailblazers in the cannabis space, but to the East, some of the operations are trickier to get the licenses, and we've seen other people we've interviewed about saying that really strong operators are the ones that can get licensed in the more difficult areas. I think Derek Peterson, who we interviewed a few days ago, I think he alluded to that he likes stronger operators sometimes, but it may have been someone else.
Is this a vertically integrated company? This Acreage, are they? In other words, are they grow their own?
Oh yeah, I mean it's the key. Yeah, they have all aspects. They've got cultivation.
Yeah, from beginning to final product.
I'm not super familiar with the offering, but what I think will be noteworthy, first of all, the size of the deal. There seems to be a lot of excitement. It's likely going to be oversubscribed. That would probably put a kind of an excitement on the first day of trading if the demand retains that kind of
Be interesting to see that
tightness.
one, to follow that one, wouldn't it?
Yeah, and I think also because of its massive footprint, I think it's going to be the biggest integrated multi-state operator publicly in the U.S. If even maybe whether it's public or private, it may be the largest multi-state player. But that could become a kind of a one-stop shopping for investors who want to examine or participate in the prospects of the U.S. marketplace on a multi-state basis through one purchase. And I think that obviously is where some of the excitement's coming from. So it's going to be one to watch, called Acreage, and I think it's coming.
I guess
coming to the markets fairly soon.
The new symbol will be ACRE, acre.
I don't know that.
That's just a guess. But look, Steve, always great having you. You're a very knowledgeable co-host. It's been a historic week in a lot of respects. I'm still wowed by the action in Amazon this week. Just the range of movement and different moves, back and forth. We saw marijuana stocks continue, and now they've seemed to stop the drop, but they're not popping that I can see. Anyway, I guess you're going to be back on Monday.
That's the plan.
And it's the weekend. Thank God it's Friday, and maybe it's Miller time. So that's it from Midas Letter Live, folks. Steve Misener, Ed Milewski. Have a great weekend.